Welcome to the Freedom Culture. Right. Hey, at the Freedom Culture, I like to discuss recent current events in the financial sector, this new digital economy, and also breaking down blockchain technology in the most understandable terms possible. And it's been hard to catch up, man. It's been a lot going on. There's so much going on, so much distraction, so many catastrophes. We got a catastrophe here, catastrophe there, aliens in the sky, and ain't nobody got time for that. You know what I'm saying? I ain't got no time for no aliens. I don't got no time for a lot of these things. I'm just focused on the money. You know what I'm saying? I'm sure everybody else could cover a lot of other aspects, but you can't have your attention on everything. You know what I'm saying? You got to focus on one particular thing at a time. And I choose to focus on the money because there's a lot of movement going on. And my thesis is, which is starting to show to be correct, my thesis is now we are in a phase of regulatory actions when it comes to the crypto space. And that's why I always advocate, to be on the right side of things when it comes to crypto, because a lot of these assets are going down. A lot of these cryptos are going down. 99% of them. I won't be surprised.
You look at the dot-com era and compare what went on there, you have to expect a lot of these smaller cryptos to ultimately get flushed out and go to zero. Again, in the dot-com era, we saw the same sort of greed driving some of these companies that had no reason to go up to $100 million valuation.
The detail here is that there was only room in the world and in the economy for one Amazon and one eBay. The reality was that most dot-coms weren't meant for success.
There are around 3,000 different digital assets that trade on a daily basis now. I think, anytime there's a new market, there's a lot of people that run into that market and try to show that they can solve a problem, they can deliver a customer need. I have said publicly before that I think 99% of all crypto probably goes to zero. But there is that 1% where I think that is focused on solving a real problem for real customers and is able to do that at scale. And that's going to be game-changing, and I think that's going to continue to grow significantly in the decades ahead.
So I feel like we're approaching the stage of heavy regulatory actions when it comes to the crypto market scene. I think the Federal Reserve and the bigger banks, they realize hey, you alternative payment systems such as PayPal, Zelle, and cryptocurrency are chipping away from our bottom line, and they can't have that. And they also see the potential with the technology, the innovation, and how it can really blow them out the water. Like I said, cryptocurrency is going to do what to the banksters what the self-checkout line did to the cashiers. So they're smarter than that, and they're going to do anything in their power in order to prevent that from happening.
New research showing that nearly 2/3 of businesses and 1/3 of consumers indicated they would factor access to faster payments into future decisions on whether to switch financial institutions. Jill and her team looked at their own customer transactions and discovered an increasing number of customers moving funds to alternative payment services, such as digital wallets and mobile payment apps. This corresponded with a noticeable decline in customers' deposits and accounts at Community Bank. They knew they had to take action.
And then we live in a world called crony capitalism, where the private sector is connected with the public sector and the politics and stuff like that. You're just paying off politics. I mean, you got FTX been paying off several Democrats and all this stuff, all this lobbying and this bribery and stuff like that. So we got these guys. That makes it easier for them to just shut shit down. They have the power and enforcement to shut shit down and pick favorites and stuff like that. You know what I'm saying? So right now they're moving in hard on cryptocurrencies, and 99% of them is going to go down. I'm not surprised. I don't even know 99% of them. Like I said, only stick to regulatory compliant cryptocurrencies. The cryptos that's okay, that's already okay with everything. You know what I'm saying? They're regulatory compliant. They're clean as a whistle. They have a team behind it, very smart people behind it, committees behind it. It's like a whole project. You know what I'm saying? Sophisticated individuals involved. I'm a long-time investor. I see this innovation as something bigger than a lot of people see it. So I hold for the long term. But ISO 222 crypto.
She initiates the payment. Her credit union screens the payment and sends an ISO 20022 compliant payment message, either directly or through a service provider to the FedNow service over the Federal Reserve's FedLine network. The FedNow service instantly validates the payment message and passes it along to the coffee bean supplier's bank. In real time, the supplier's bank confirms to the FedNow service that it intends to accept the payment, and the FedNow service debits and credits the master accounts of both the shop owners and the Coffee Bean supplier's financial institutions or the master accounts of their correspondents. The FedNow service also immediately sends a payment message with an advice of credit to the supplier's bank and notifies the shop owner's credit union that settlement is complete.
Cryptocurrencies are going to be the tech, the software provided for the CBDCs and all the once the government gets involved with crypto and blockchain tech, like those are the guys that's already clean and compliant that large institutions would trust in order to play with. You know what I'm saying? And especially once we get the Ripple clarity from this SEC case too, like they're just gonna jump onto this technology and make it happen and make the fourth industrial revolution happen. These things connect the dots for them to achieve their goal, you know? So it's good to get in low, buy it for the low and sell it for the high. That's my strategy. But yeah, like I said, this is big bank taking little bank, heavy regulatory actions being played out from the SEC, the White House. Eventually they just laid out this new document about mitigating the cryptocurrency risk and stuff like that. The FedNow, the Fed is involved. All of this is to stop competition. They make it seem like it's for your best interest, but no, it's to stop competition. They don't want anybody else to be able to do the things that they do. Like, for instance, this new ban on staking that what's his name, Gary Gensler, was talking about. He's talking about banning staking. Now, pretty much it's all contradiction, because the bank system that we got right now is, staking. The fractional reserve banking system, the only thing is that you don't get the type of interest that the crypto staking would provide if you was to go that way. As soon as you put money into the bank is loaning money out and you get no interest. You know what I'm saying? You put $1 inside, somebody else take it out. So it's like, I'm gonna play the video, but it's like everything he's saying is a contradiction. They go under this facade like they're for customer protection. You're not that customer that they're protecting. It's the rich folk that they're protecting. They don't want that transfer of wealth to happen. You know what I'm saying? That's my perspective. That's how I see it.
That's S-T-A-K-E, not S-T-E-A-K. In the crypto markets, there are various ways to validate data stored on crypto ledgers called blockchains. And one of these ways is called staking. Investors lock up their tokens in escrow and help validate the next block of data. Some stakers are then rewarded with new tokens. Staking, though, can be complicated and time-consuming and can take big upfront commitments of tokens. There's also the risk that you won't get new tokens even if you stake. Thus, crypto entrepreneurs started offering what's called staking as a service. No, not like the steakhouse. Basically, if you transfer your tokens to a staking as a service provider, they take control, possibly pooling your tokens with thousands or millions of others while promoting returns. But here's the rub. When a company or platform offers you these kinds of returns, whether they call their services lending, earn, rewards, APY, or staking, that relationship should come with the protections of the federal securities laws. That means you, the investor, should receive important disclosures. For example, what do they actually do with your tokens? Are they really staking them? Are they lending, borrowing, or trading with them? Are they commingling them with their other businesses? Where do the rewards come from? Are you getting your fair share? There's currently no reliable way as an investor to know the answers to these important investment questions. Plus, when you sign on the dotted line or accept the terms of service, you are generally agreeing that placing your tokens with these providers may mean transferring your ownership to them. There's an expression in crypto, not your keys, not your crypto. You see, you're basically an investor in their platform. If it goes under, and we've seen plenty of that recently, you end up in line in the bankruptcy court. That's why it's so important that these companies and platforms comply with the securities law.
Yeah, like everything he's mentioning is exactly what the fractional reserve system is doing right now, but we just don't call it staking. We just call it banking. You put money inside and, it's staked. You got to keep it at a place, or you might get fined if you go spend beyond the limit. You know what I'm saying? They might charge you because they was using your money to hustle. You know what I'm saying? Meanwhile, you get probably 1% interest, if that.
There's a couple different risks, but Anchor Protocol seems pretty good for just getting 20% a year. That undermines every single bank on planet Earth. 20% is better than any bank. There's no reason to put your money in a bank when you can put it into a credible stablecoin, stake the shit, and make 20% on it.
The SEC should not matter. We have gone through a transition where Gary Gensler has hijacked our entire industry. He won't tell you what's really happening. All he does is he takes his orders from the banks. He worked at Goldman Sachs, for God's sake. We literally have a banker running crypto. I told you they would not do it from the outside. They would come to the inside and try to break it up from in the middle. Gary Gensler has to be removed.
Their whole game is to make the digital world work for them instead of it work for us. So we're gonna migrate more into heavy surveillance, and them being able to track everything that we do. The CBDCs, all that's everything that the CBDCs entails. And then we got the FedNow system. The FedNow system is supposed to come out in March, and that's pretty much like PayPal or Zelle, but it's from the Fed. It's direct money coming from the Fed. It makes everything instant. It's on blockchain in order to make these assets so instant and fast and stuff like that to these banks. And then the banks is going to be able to give it out to the people in some type of form of stimulants. You would think that they're preparing for something, but I don't know. I'm speculating that they're preparing for a bail-in. A bank bail-in is going to be, when the bank is just using all your money. The bank is bankrupt and they just use everything that's in your account.
Bail-ins. Let me explain quickly what that is. Banks have a hard time because they often make terrible mistakes. That is, they invest money by loaning it out to people and businesses who can't pay it back. It turns out that the laws have been rewritten, starting with a bank in Cyprus that went belly up a few years ago. To allow banks, when they can't recover money they lent and should not have lent, they don't now have to go to the government to get a bailout. They can get a bail-in. You know what that is? Taking money from the depositors who put money in the bank and simply taking it to recoup their own capital that they can't get back from the people they lent to. Is it legal to have a bail-in, to take the money of the depositor and not give it back to them? The answer is yes.
I got a $100 check from my grandma, and my dad said I need to put it in the bank so it can grow over the years.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
What?
It's gone. It's all gone.
What's all gone?
The money in your account. It didn't do too well. It's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
That being said, we got the FedNow payment system, which will be using the ISO 222 messaging system in order to function, So ISO 222 compliant cryptocurrencies will be XRP, Algo, XLM, XDC, IOTA, and all of these software, I like to call it software companies, has functionalities in order to connect the dots into what they're planning on doing, which is ultimately a CBDC, a centralized, like I said, this is a battle of the decentralized to the centralized, you know what I'm saying?
I think 2023 really will be a year of the regulators versus the builders, regulation versus decentralization. Definitely this argument that is going to be raised in cases like the Ripple lawsuit and others, in particular Wahi, that these tokens may have been securities when initially sold, but they're not necessarily securities today. And that's the big issue for the SEC in 2023.
Yeah. Understanding the promise of crypto, the benefits that it has for markets and for individuals, and then adapting the regulations to allow those benefits to be attained is the biggest opportunity and challenge in front of us. Look, people need to get to the bottom of what happened with SBF and FTX. I think it's a critically important issue to resolve.
It appears to be the same old school fraud.
It's a much bigger problem with crypto generally.
This money laundering that's done through crypto.
The dialogue we'll have with U.S. policymakers is a lot like we'll have with policymakers around the world, which is to talk about how crypto adoption is continuing apace, even in the midst of a market downturn, and that the need for regulation is right in front of it.
I do think one of the challenges here is crypto doesn't fit neatly into the box of existing financial services. And at the end of the day, it's impossible at this point, I think, to put crypto back in the box or to shut it down. The only thing that can be done is sort of to try to delay or temper its growth and its integration into the broader financial system by shutting down some of these on and off ramps, or at least restricting flow.
So it wouldn't come to my surprise that every cryptocurrency goes down to zero besides the ones that they plan on using, and, spread massive FUD and scare and stuff like that in order to keep people away from these coins because, they need them. They want to buy it up and have more centralized control. But one cryptocurrency that I came across that nobody really mentions is Cypherium. Cypherium is the selected blockchain for the FedNow payment system. It's all about interoperability. Like Quant might be involved in other blockchains. I mean, we already know that XRP will be involved because of FedNow being partners with Volante, and Volante would verify that information that's being in the transaction, and Ripple has a technology placed in the Volante tech that sends the money directly to the proper account. So either way, these assets will be valuable to this fourth industrial revolution that's coming out. So that's why I'm buying these for the low. I'm bullish on crypto for the short term right now, and I'm bearish on humanity because this CBDC shit is coming out with aggression, and I could see all the game plays that they plan on doing. When you look at the DXY, you see the DXY was pumping up hard, and now it's coming down fast. You know what I'm saying? And you look at the interest rates. The Feds drop rates as fast as they raise them. Now everything is talking about March, and it kind of seems like March, the FedNow payment system is going to help this problem of whatever this recession or this crash or whatever, in order to print out more money in a digital way. You know what I'm saying? So that's why we're talking more about the digital dollar, the stable coins and all that stuff. I'm all about trying my best to stay out of the system because I feel like people like me will have a hard time with the CBDCs and the digital IDs and stuff like that. So I'm buying gold. I'm buying some privacy coins, buying some silver, pretty much taking all of my income and diversifying it and everything. Because it's gonna be, although it might sound scary, it's gonna be great for those that's in it. Once you're in it, you gotta be in it to win it. Because you're holding these cryptos that they plan on using, and it goes up, you up too. You know what I'm saying? You're holding the keys. You feel me? So I feel like we're gonna have a big uptrend, and then something's gonna happen that's gonna come crashing down. Because another thing with this Cypherium crypto, it only has pairs with Tether, and Tether has a whole other situation about it. So I don't know what kind of game. And then it's also proof of work. And I thought we was against proof of work because of the climate change and all that stuff. So I'm not sure what kind of games are being played here, but I move money fast. I don't plan on holding on to anything. You know what I'm saying? Plan on taking my bank, taking my bread, and then putting it into something, a more solid asset. I do plan on still buying real estate before they buy it all up. Look, we know the end of the game here. You will own nothing and you will be happy. You got corporations buying up a whole lot of homes and renting it out right now.
If anybody out there is wondering why the housing market is still messed up, see all these blue signs? There's a whole brand new block of houses. Every single one of them's owned by the same company, and they're all for fucking rent.
So, I'm moving diligently and trying to move fast too. You know what I'm saying? Trying to move fast. Trying to think of anything else I wanted to touch on. It's been a while trying to get back on the system and things. It's been so much thing to research and, to process and digest it, to give it to you in a good form, in a most understandable tone. Any questions at all, it's my honor to respond and answer if I could. So please leave a comment below. Going forward, I'm gonna share more about my strategies on how to come up alongside with this fourth industrial revolution. A lot of jobs will be lost. We got the chat GPT, we got AI and stuff like that, but we still got our mind and we got creativity, and we know how to move around with, we know how to keep our mind on the swivel and move around all these things. You know what I'm saying? Like, I'm gonna start sharing more about cybersecurity, which is gonna be a high demand skill, for the upcoming ages. So, and also plan on sharing a lot more of my crypto moves, which I have a lot of moves that I have to make before the great shake, well, the great take, because I will be taking profits really soon, and then it's going to be a great shake. Everybody's going to fall out, just imagine some horrible things in your mind. That's what it's like. Nah, I'm kidding. But yeah, it's gonna be all right. Just do the knowledge. As long as you know what's up, know the game, and you can't be played. You know what I'm saying? That's pretty much it. It's been a long time. Tap in. Watch out for the next video. I'm gonna be more in depth about things, but I just wanted to share my thoughts on what's going on right now. Heavy regulation, and it's exciting, low key, because if you're already in the place of if you're already in a good place and they're regulating, it's kind of like excitement, because these are the things that's gonna be shining. The assets that you hold in like ISO 222 will be looking shiny when everything else is looking bad. And as the charts show, money, the DXY is down. Once the DXY goes down, money flows into equities and crypto. So it's a little good, it's a little bad, it's a little good and the bad. You know what I'm saying? So none of this is financial advice. Keep up with me on the Freedom Culture. Peace, love, respect. Take care of yourself. Do your research and execute. Apply yourself. All right? Peace.
That's what happens. Don't fold, the game test you. If you pass it, you gone, they can't catch you when it's permanent.